Hello all, welcome to Sand Compounding. This is Sandeep Anand. I'm starting a new series called 20 for 2030. And what does that even mean? For investors, in investing, the formula of compounding, which is very powerful, and the formula is P into 1 plus R by 100 whole to the power N. And N is an exponential factor. N is nothing but, we all know, it's a time invested, time we invest in the capital is invested in a business, or the tenure as we can call. And the tenure or longevity of our investment is very important because if we make investments in businesses that can sustain for 10 to 12 years with a good level of growth and at the right valuation, we are made home. The returns on the capital invested would be very high. Now, how do we find businesses which can run and which has such longevity of 10-12 years, especially in today's world of disruption? Every business is getting disrupted. Erstwhile, no wonder Warren Buffett, the legendary investor, used to find businesses which are least disruptive and that can run for a long time with growth, and he called it as moat. While moat investing, I don't know if it's really that relevant in today's generation because all businesses are getting disrupted with the advent of digital and mobile and internet. Now, identifying such businesses is a very difficult task, and I have tried my best to find out 20 such businesses which can pay way till 2030, and come 2030, in hindsight, these businesses would have been great to hold for such a longevity period. Now, how do we find these businesses? I've applied the principle of inversion, which I learned from Charlie Munger, and we look forward to 2030, and when we look back in hindsight, the inversion principle, based on that, what businesses could and why those businesses could sustain till that period is what I've done. So here are such 20 stocks, and one most important thing, not in investing, not all businesses are great investments at all point of time, but most point of time. So there could be reasons being valuation is one important factor which can control the time when we enter into a business. If there are frothy valuations, our returns would be mediocre. So it's very important to identify great businesses which has longevity and at the same time that has good growth and the right valuation. So, but this could be a blueprint or a watch list that we can use to identify, and when the correction happens or recession happens, these great businesses could be a great entry point, could give a great entry point. Hope this gets interesting as we move on. The next business in 20 for 2030 is Britannia Industries. This is a leader in the biscuits and bread space in India, and it's a food and confectionery business. It's a century-old business that has given immense returns to the shareholders over the last couple of few decades, I would say. It's a typical strong franchisee leader market space in biscuits and breads. It's a duopoly with Parley being the other competitor, and many other products they have, held by a family-owned business in India called Wadia Group. Current CEO is Warren Berry, who is known for his CEO skills. He has appended the Britannia Industries over the last 6 years since he took over. Operationally, it was already a strong franchisee and a strong moat, but they have done very good operating improvements to the bottom line, and this business, the stock has returned significantly in the last 10 years. The last decade, it has returned around 2200% times and given immense wealth to the shareholders. It's a typical, you can compare to the Warren Buffett's investments in See's Candies, which was a market leader in the western zone in US, but this is a pan-India market leader, and the growth has been tremendous over the last century. And I'm sure the next decade also Britannia Industries would continue to kick in the growth. It has been a steady 10% revenue growth and 30 to 35% return on capital employed, a steady compounder for that matter, and they're maintaining their market share, and sometimes they go and increase 1 or 2% of market share. With a burgeoning middle class, a strong moat and a strong management, I think Britannia Industries deserves a space in my 20 for 2030 list. Let's analyze more in detail.
So Britannia is one of the most trusted food brands in India, and they manufacture India's favorite brands like mainly in good biscuit segments, but like Good Day, Tiger, Nutri-Choice, Milk Bikis, Marigold. There are a slew of products they have in the biscuit segment. It's a household name in India, and Britannia's main product portfolio includes biscuits, breads, cake, rusk, and dairy products, and also includes cheese and beverages, milk and yogurt. Now, Britannia is a brand which many generations of Indians have grown up with, and their brands are cherished, and loved out in India as well as some of the countries outside India. Now, the products are available across the country in close to 5 million retail outlets, so their distribution range is wide across India, because obviously they are existing since a century, and reaches over 50% of Indian homes. The company's dairy business contributes close to 5% of revenue. It's not significant, and dairy products directly reach to 100,000 outlets. Britannia Bread is the largest brand in the organized bread segment and bread market, and with an annual turnover of over 1 lakh tons, 100,000 tons in volume, and rupees 450 crores in value. Now, the business operates with 13 factories and 4 franchisees, selling close to 1 million loaves daily across more than 100 cities and towns of India. So it's a big brand in bread segment. Also, it's recognized as one of the most trusted, valuable, and popular brands among Indian consumers in varied reputed surveys. This belongs to the Wadia Group, as I said in the starting, and it's a business, family owned business, and the current managing director is Varun, and he has been there over last 5 years. So Varun Berry has been, I would say, instrumental in Britannia's turnaround in the revenue growth and operating margins over the last 5 to 6 years. He has an experience of over 27 years for premier companies like Hindustan Unilever and PepsiCo, all in the fast moving consumer segment, and Varun Berry carries a lot of name in the FMCG segment in India. Now, at present, 90% of Britannia's annual revenue of 2,200 crore comes from biscuits, and Britannia has around 40% market share in the biscuit segment, which clearly shows its monopoly in the biscuit segment. So it's out and out business. Biscuit is their main source of revenue, and to some extent breads and dairy put together. So that's how Britannia's market leadership is. It's 40%. There is only other player which is almost similar size of market share, which is Parle. So these are the two players in India who are dominating in the business and food confectionery space. Now, this is a pictorial view. They recently celebrated their 100 years, which is a phenomenal achievement and a great feat in itself, setting up the space for the future growth as well. They launched 4 new categories recently, and they also changed their logo as part of 100th year centenary celebrations, made it as exciting goodness. Now, it's part of the Nifty 50 in stocks in India, number 1 food brand by brand equity, 24 new launches just in 2019. So there we go, your pictorial representation of all their products which they released as part of their centenary celebrations, and all the main products are displayed there. Almost all products are displayed there. Now, Britannia has created immense wealth for shareholders, great returns on capital, plus consistent 10 to 15% revenues and revenues and volume growth. So they have the graph shows that 2013 is when Warren Berry had taken over, and Britannia has returned 12 times price appreciation since that. Even earnings had grown in a similar proportion. That was the inflection point, 2013 for this company, when this particular CEO took over, and currently the company is valued at 53 times earnings, which has been around, it's always traded at a valuation which is premium to the market because of their niche leadership in the market segment, and as well as high returns on capital and consistent revenue growth, right? So growth is consistent, and that's precisely why market is valuing it premium. Now, this is a segment where the balance sheet snippet is put in there. I've just done a valuation analysis just to show how their returns on capital stack up, as well as to see how their revenue growth has been, right? So we can see that in the inventories is 719 crores, total assets, property, plant and equipment plus the other non-current assets put together is rupees 2,582 crore. Now receivables is 351 crores, payables is 1,030 crores outgoing, and total capital employed, what I've calculated is the total PPE and non-current assets put together and subtract the payables from that, basically arriving at the working capital, adding the working capital to the non-current assets, and the total capital employed is 2,622 crore. And 2019 Britannia had a net operating profit after tax of rupees 161 crores. So a simple division that fetches you a return on total capital employed as approximately 44% in just 2019, and this has been the trend. They always maintain between 35 to 45% return on capital employed and consistent revenue growth of 15% roughly, and it is a staggering phenomenal achievement by the business by the management. And the cash flows are also great, capital allocation is great, they have strict operating controls, and this turning point when Varun Berry came, they put a lot of rigor in place on the operating expenses. They cut down operating expenses like anything. They increase the margins consistently over the last 5 to 6 years, and precisely you can see why their shareholders got benefited when they utilized this last 5 to 6 years of holding period. Now you can see the operating margins at 16%. It's after a lot of hard work put by the management, and operating cash flow of rupees 1,732 crores. Debt is negligible, cash position is pretty high, 1,586 crores rupees. Market cap roughly $10 billion, 71,400 rupees in crore in terms of Indian rupees. So there is still a long way to go with the burgeoning middle class in India, and we'll see why why Britannia would be a great asset to hold in the next couple of slides. Now coming to the revenues, profitability segment wise analysis, the firm reported revenue growth of 12%, achieving 10,500 rupees crores in FY19. Now look at this. This is the growth achieved, revenue growth achieved when there is a complete not a recessionary period but a complete cut in spending, consumer spending by Indians in 2018 and 19 due to a lot of factors, credit crunch and many other systemic issues. And even in spite of that, Britannia is growing pretty well. They are growing at 12%, and they are into the fast moving consumer goods product category, and they have launched new category entries, new product launches, new premium, and also done premiumizations. All of them helped garner more revenue growth in 2019. When I say premiumization, you can see in one of the slides I showed there were a lot of new products in the premium segment, the same branding appending it into a premium segment where it can fetch higher margins. Now snacks is a 25,000 crore category, growing at 20% per annum, which is one of the segments in which they are operating in. They have launched 5 exciting formats of salted snacks in select geographies. Milk-based drinks is a 2,800 crore market space, and that's growing at 27% per annum, which is again growing significantly faster. Launched 4 variants of thick shakes, now launched 4 variants of wafers under Treat brand, and launched 2 croissants under Treat brand. Now premiumization involved premium brands of Bourbon, Cakes and Good Day, and it's a good strategy to adopt when there is premiumization, as well as high volume segments in the middle tier and in low end segments as well in the biscuit space. Now strong R&D capital to launch innovative new products like open sandwich biscuits, croissants, and new products like cake category. You could see the revenue growth from operations also 10% CAGR over the last 5 years in the graph next to that. Now company continued to focus on improving competitiveness in its operations through various cost efficiency and operational excellence programs across the value chain. Now during the year, various non-value added activities have been eliminated through value stream mapping exercise across major manufacturing units, thereby resulting in significant productivity improvement. This is a trend that I've noted, especially in the last 5 to 6 years when the new management came in under Varun Berry. They have put a lot of rigor in ensuring, in eliminating the the excesses and the wastages and the slippages, and they have put a mapping exercise to do that across the manufacturing units and achieved significant productivity improvements. Operational efficiencies and productivity improvement have been significant under this management. As part of their centenary celebrations, Britannia unveiled a brand new logo after 20 years. Now, the logo exemplifies the excitement and goodness of the youth, I would say rather. The elevation and brand building has been key strength for Britannia to attract the mass market. So they have the mass market, which is the mid-tier segment and the low-tier segment with biscuits and breads, and they have the premiumization of the brands, like bourbon and croissants and all in the new category. So it's a good combinations to have. Now, the branding, going by the as we speak about branding, they won the Economic Times brand equity most trusted food brand in 2018, and Interbrand, which is one of the premium, one of the best branding segment. I mean, Interbrand brands almost, values almost every brand in the world, and they branded best Indian brand, and and they gave the award to Britannia, which is a great feat to achieve. Now, finally, why I think Britannia will still be a great business to hold in hindsight: strong brand name and duopolistic nature of the industry, where Britannia has 40% market share, will continue to exist for the next decade too. Management has strong focus on maintaining such high margins. They have decent volume growth plus pricing power to maintain the revenue growth consistently year on year. Some of the economic, geographic factors and demographic factors in India, like burgeoning middle class, high disposable income, will increase discretionary consumption in packed food and confectionery space especially. Management is focused on R&D to bring more innovations on new products, as well as premiumization of existing gamut of products, which will expand market share and increase margins with a great management focus. So that's all the story is about Britannia, and I hope this was useful. Thank you.